Welcome to Money, Legacy, and Her, the podcast where ambition meets action and wealth is built with receipts. I'm your host, Darice Rene. Every week, we break down the real money moves, mindset shifts, and bold strategies ambitious women need to create legacy on their terms. This isn't hustle culture, it's power moves only. Let's get into it. Most commercial real estate deals don't fail because they look bad. They fail because they looked good to someone who didn't know what to look for. And I'm going to be honest with you. I see this all the time. Smart women and men, successful in their business, making money, and then they get into commercial real estate and suddenly we're guessing. Not because you're not capable, but because nobody actually taught you how to evaluate these deals properly. And if I'm really being real, sometimes it's not even that. It's optimism. It's excitement. It's that little voice like, okay, but this could be a good one. And now you're trying to make the deal work instead of asking if it should work. And that's where people get hurt. Because you're not out here trying to buy a bad deal. You're worried about missing something. Overpay and not realizing it until later. Trusting a rent roll that looks stable but isn't. Underestimating expenses that slowly eat your returns. Using leverage that looks cute on paper and stressful in real life. You know what I'm talking about. It's not the obvious stuff. It's the things that look fine until you actually sit down and go line by line. Let me give you a real example. We looked at a deal recently, a small multi-tenant with retail. And on paper, it looked solid. It had around an 8% cap, multiple tenants, a good enough location, nothing crazy, but it checked all the boxes people are taught to look for. And that's exactly why it's dangerous. Because once we actually broke it down, the story changed. 2 tenants were close to the end of their leases, so that stable income, not that stable. Expenses were underreported. Utilities were shown at $18,000 a year when they should have been closer to $30,000. Maintenance was listed at $12,000, but based on the property condition, it was realistically more like $20,000. And there were no reserves accounted for at all, which means the performance wasn't as strong as it looked. Rents in that area were starting to soften a bit, which means the growth everyone was counting on wasn't guaranteed. So the future upside that everyone loves to assume, yeah, that was optimistic. And the financing, a little too aggressive for what the deal actually was, meaning the loan terms were structured in a way that assumed everything would go right, with very little room for error if income dipped, tenants left, or expenses came in higher than they expected. So what looked like an 8% deal was really closer to a 5% deal with more risk layered in. And that difference, oh, that's not small. That's the difference between a deal that feels aligned and a deal that keeps you up at night stressing. And here's the thing. The person looking at that deal wouldn't have caught that without slowing down and actually knowing what to look for. That's the gap, the red flags. And it shows up even more in off-market deals. Because right now, with the great wealth transfer that's happening, we're seeing a huge increase in properties being sold quietly. Family-owned assets, long-held buildings, owners aging out and passing things down or deciding to exit. There's over $80 trillion expected to transfer over the next couple of decades, and a meaningful portion of that is tied up in real estate, which means more deals are happening off-market than ever before. And people assume that's where the good deals are. But the truth is, Those deals can be riskier than people think because often they're less transparent. There's less professional management that has gone on, and the numbers haven't always been cleaned up or stress tested. So if you don't know how to really evaluate what you're looking at, you're not getting an advantage. You're just taking on more unknowns. So let me make this really simple for you. Before I trust any deal, I look at 3 things first. Number 1, income quality. Not just how much money it says it makes, how solid that money actually is. Who are the tenants? How strong are they? How long are they staying? How much risk is baked into that income? Because income can look good today and disappear faster than you think. Number 2, real expenses. Not just what's listed, what's missing. What's been cleaned up to look nice? What hasn't hit yet? What's going to show up after you close? Because this is where deals quietly fall apart. And number 3, the exit reality, not the fantasy, the real version. If you needed to sell this, who's buying it? At what cap rate? In what kind of market? Because you're not just buying a building, you're stepping into a future exit, whether you're thinking about it or not. And if that part isn't clear, you're guessing. And I don't like guessing with your money. This is also where I'm going to lovingly call something out. Most people start by looking at properties. You're scrolling listings, touring spaces, running numbers on whatever's in front of you. You're reaching out to the seller's agent, scheduling appointments. You're reacting. We don't do that. We start with, does this even make sense for you? Your capital, your risk tolerance, your long-term plan. Because a deal can be good and still be wrong for you. And if you don't know that difference, you end up forcing things that don't fit. So if you're looking at deals right now or even thinking about it, pause for a second. The smartest move is not to go tour another property. It's to get really clear on how you're making decisions, where you might be missing things, where your assumptions are a little too generous, where you're relying on surface level numbers. And that's a wrap on this episode of Money, Legacy, and Her. I hope you're walking away with the insight and the fire you need to take your next bold step. Because when women build wealth, we shift generations. If this episode spoke to you, subscribe, rate, and leave a review. It helps more women find this movement. Want more? Head to moneylegacypodcast.com to get connected and grab tools to support your legacy journey. This is Darice Rene signing off. Stay focused, stay powerful, and keep making money moves with purpose.